Alrighty, so today's trade was on Euro GBP. Let's break it down. Let's get into it. So what we're looking at right here is my free Discord chat room. If any of you guys want to join the free Discord chat room, there's going to be a link to that in the video description. 100% free, doesn't cost you a dime to join. And that's where I post my analysis every single morning. So here's the chart that I posted. You can see time stamped 5:54 a.m. Eastern time, right? So no hindsight. Euro GBP. Here's what I outlined. What I have outlined right there is a 4-hour bearish order block, aka a higher time frame level of resistance. Okay, and then if we scroll down, you can see now it's just displayed on the 1-hour chart that there's a 4-hour bearish order block just displayed on a 1-hour chart. And as you can see, what did I say here this morning at 5:54 a.m.? Euro GBP bias is bearish, higher time frame market structure bearish, drawing to that big sell side liquidity pool. Came up, tested 4-hour bearish order block, rejected, sold off. Once this candle closes, you'll have that fair value gap as well. Okay, so now we're going to go to the charts. All right, so let's break it down. So I'm going to start from scratch. We're going to remove all this. And like usual, we're going to start from the higher time frame, the daily chart. Because we have to ensure one thing first. We have to ensure that we're trading with the correct market structure, that we're trading with the overall trend, the overall tide, right? So Euro GBP, I want you to answer among yourselves, what is this market structure currently? What is the market structure on Euro GBP? The market structure on Euro GBP is bearish, right? So it's operating within a bearish market structure at the current moment, okay? So we are indeed trading with the overall trend, okay? So when I was talking about a draw on liquidity just a second ago, this is that draw on liquidity on the daily. Okay, draw on liquidity doesn't mean PT. Okay, it's just the draw. That's where price is drawn at the moment. Okay, there are sell stops resting beneath this level. That's where price is drawn at the moment. Okay, that swing low level. That is our draw on liquidity. Okay, so we can see price, it ended up curling up right here, rebalancing that portion of that price action. Then we put in a swing high level, which is bearish, signs that it's topping out, and it's starting to assume it's moved to the downside, right? So now let's go to the 4-hour chart. You can see right here, see this? There's that 4-hour bearish order block that we were talking about this morning. Now, it's not a extremely high probability order block. Why do I say that? Well, and what would make it high probability? Well, what we want to see is that fair value gap for one. That fair value gap, when you have an order block that's nestled inside of a fair value gap, I mean, you're talking about a very, very, very high probability level. Okay, we didn't have that here, so that's a minus for the play. It just wasn't that extreme of a move, really. All right, it was kind of it just wasn't that extreme of a move. Therefore, it wasn't the best level. I like to see big explosive moves, right? We didn't have that there. Okay, all right. So what do we need next? We need our fair value gap confirmation, right? So right here, we actually had the fair value gap right here. See this? So I'm gonna plot it on there really quickly, and boom, right? We have a higher time frame level. We're trading with the higher time frame trend, the daily chart trend. We're trading with the daily market structure. So we're trading with the overall tide. We have our fair value gap confirmation. And now right here on this push up. So basically right as we came into New York kill zone, I was shorting this thing. So I was marketing into the play because it was already at a good price. So it was already up in a premium. It had already traded up into that fair value gap. I already liked the price as soon as it turned 7 o'clock. That was the entry area. As soon as it popped up into this fair value gap in a premium. That's your confirmation. We got the confirmation. Like, it had everything we wanted on it. It had everything checked off the list. Okay. Now, what was the stop on it? What was the PT on it? So the stop on it was above the fair value gap high. So AKA high of day, right? This high right here, that was the stop out point. And my PT was low of day. Okay. So about a 1-to-1 risk reward ratio on it. So you can see now we go to a 15-minute chart just to kind of clean it up a little bit. But the fair value gap confirmation was on the 1-hour chart. So you can see right here on the 15-minute, you can see we took these buy stops as well. We also have this bearish order block right here as well. So we came up, took those buy stops, tested that level of resistance, and then boom, you get that nice move to the downside, right? So again, PT on this was low of day right here. See this? So I wasn't able to get out on this first move right here. I wasn't able to get out right there. It was too shallow. But then it pushed right back up, and then this next move lower right here, that's where I was able to exit with a profit. Now, I wasn't able to get a full position on this thing. Like I stated on Twitter, I wasn't able to get a full position because really it just moved too quickly for me. It just didn't stick around long enough, and sometimes that'll happen. And well, that's just part of it. But Still overall though, solid play, really clean price action. And yeah, just a really nice setup on it.